Good afternoon, Scott Redler, T3 Live. Welcome to today's recap. It's Wednesday, the last full day of trading before July 4th weekend. A weekend that's going to be hopefully full of barbecuing, family, fun, fitness, and some fireworks. If you're looking for some fireworks on the market today, though, they had quick little bursts, but then they fizzled out pretty quick, and that's what happens when you have low volume and just most people heading for the hills or the beaches or the mountains or wherever it is they're heading for. You just have to be very careful and just not do a lot. There were some pockets of potential today, right? Potential. But if you added on a trade on strength once or twice, you probably ruined your cost and lost money. And if you held things that got very extended and went back to the well one too many times, you probably are a little frustrated heading into the holiday weekend. So with that being said, hopefully you're in a decent state of mind. We've had an enormous run and markets are still at highs, and it's just very testy right here. It's very thin, and you're better off heading out early. I know tomorrow I'm not doing the morning call. I'll be trading from Short Hills and then off to a nice little holiday spot. With that said, let's just go quickly to the charts. If you look at the SPX, really no big deal whatsoever, right? Here's when we broke above 1890. Here's when we broke above 1902. Quick beeline as high as, 1955. Pullback, test the 21-day there, a little bit below the 8-day. The little pennant, move upwards. Outside day, didn't amount to anything, engulfed pretty darn quick. And then you had yesterday's first day of the month and just a really small inside day in the S&P. So with that being said, nothing really out of the ordinary. Above the 8-day, above the 21-day, a little overbought. That's why you don't want to overdo it on days like that. So we came in today with some thoughts, right? One thought was let Apple digest and build a bit of a flag, and we'll get a better trade after having a nice trade from the descending channel that we saw last Thursday. And that's what took place. So good for that, right? This was after earnings, quick move to the upside, post-split, a little bit of exhaustion gap, and then you had this descending channel here that we talked about on Thursday, and I think we caught a nice trade into this. Got out a little early, and now it's flagging. I was tempted to buy a little bit close to 93.20s, but I said I'll just wait a little bit longer. So another session or so, and potentially I'll get back involved, and then I'll add to it if we are to get above this 94-ish for it to take out highs. But for right now, little sideways action would be good to let the 8 and the 21-day catch up. Okay, in other high beta land, you had Google, which was the trade yesterday through 589, got a little follow through today. And if you added to your good trade from yesterday, you probably lost money. Overall, still looks fine, but in the scheme of things or whatnot, I listed the anatomy of this trade just to try and show technicals. This was your descending channel after putting in a bottom, your retest, your add-on trade. Then it peaked out, small little RDR right there, pulled back, double bottom right here with the prior breakout. Here was a nice descending channel, broke above, little bull flag cash flow trade, and then today some people bought it up and probably are sitting in it and a little frustrated. It still looks fine. Same thing goes for Amazon. The stock is a pain in the tush sometimes. Yes, I did say that, a pain in the tush. Here is a downtrend, which it broke pretty much. Let's see, when did I draw this before? This was a different spot, but I think this was where, anyway, this was your 210 or your 310, I'm sorry. Here was a nice little trade yesterday. Some of us took it home long. If you added today into this push above the prior high of 333, you probably don't know what to do and you probably hit it out. So at this point, it still looks okay, but short term, from I guess the low 320 to the almost 337 area, it might need some time. So if this were to hold now above, just say 330-ish, giving it a little space and flag again, hopefully we get a nice pattern here to then break through this triple top. Never really heard of a quadruple top because if you do it for the fourth time, typically it doesn't hold it there. But if you added today, it hurt. And with this little topping tail, some might even got flat. I did get flatted, had it overnight, and said, you know what, goes red, I'm out. Went red, and we'll see what happens next. Netflix, small little inside day, nothing, actually more than a little bit of an inside day, I guess. was green, went back below a prior high, which always is an exit sign for some people, which was 473. Some might have even got short. And then if you did that with a stop of $2, you actually wound up making for yourself, a little pocket change. Anyway, we'll see if it comes in and retests this gap, or we'll see if it tests the prior 52-week high or 2014 high, which is right here, and it still has a little space before that. So we'll see. Anyway, wasn't really set up for a long today. If you caught a huge short, congratulations. That doesn't happen often in this stock. So let's move on. I was actually doing a webinar today, and I was looking at Tesla. I'm like, this is an ascending channel. I don't like to see that. We've had many great trades in Tesla. There's always a time and a place, whether it was a 210 or 235 or 239 even. I don't think I've traded it for 2 days until late afternoon. And then this happened. This is what you call an ascending channel, right? That is an ascending channel, and they're always okay to follow as long as they're intact. But if they happen to break through the downside, you need to get out of the way. Here is the flag type descending channel that broke to the upside at 210. And then you had some trades along the way, and this now broke. Where did it hold? It held up right around the 21 days, so we'll see what happens tomorrow. Maybe there's some news of slowing sales in Norway, whatever it was. P.S. It went down, or was red candle yesterday when the market was up. So it was one red flag that it didn't lead the market. We like when Tesla leads the market, not lags the market. So that gave you a little bit of a red flag that you got to be careful. And then I think in my morning note I talked about 235 as a stop area. And if you were still in it from either here or here, maybe you got stopped out, and now we'll figure out what's next. We've seen this before at times. We'll see what happens next. I'm just sure, I'm flat overnight. We'll see what happens tomorrow. See if there's an opportunity, maybe a red dog reversal into the 21-day, because that's been holding. I would love to see that. But probably gets defended, opens up $3-4, and life doesn't go as well as we'd like there. But we'll see. Another, I guess, frustrating thing is like something like Solar City. You had to be long it overnight. You had to say, I think it's going to break out overnight and take it, like Mark Sperling did. Congratulations to him. But if you did not sell the upgrade and you bought a dip throughout the course of the afternoon, you got a little beat up and it closed on the lows. That's why we hate when things are upgraded when we're not in them. It would have been great if it was here and we were able to trade through this 72.50 for a move to over 75, but for it to open up there and just go red, that technically is a pain in the tush. I think I'm going to be using the word pain in the tush a lot today, because a lot of things were a pain in the tush. I wish I had Brittany here. She would help me explain that. No, I mean just, we have those funny things. Anyway, with that being said, so this means it needs a break. Let's go next. What did FSLR do today? Come to me, Andrew. That was funny. Anyway, the solar names. This one also gapped up and went red. So it felt as if the market was so weak today, but it really wasn't. The indices were up, but a lot of these things gapped up and didn't get a bid, and that's what creates some kind of frustration amongst traders. Let's go to FSLR. FSLR, solar's been a little out of play. You thought maybe it would catch up today, gapped up, and now it's at the 8-day, which is still fine. Okay, it's been holding the 21-day, so we'll see what happens here. But ultimately, if it were to get to here, sort of like a Tesla, I'm not saying this is such a defined ascending channel the way Tesla was, but always, here's your little reversal here. It's always a little bit of a sign in momentum names when you watch them close. When they start to come in a little bit, you just don't want to be involved when that's the case. You can always revisit. SPWR also, a little faulty, nothing so severe. We loved it here when it broke out above this 36, and then it gave you another move, but then you had a topping tail right here, and since then, it's been just choppy mess. This too, has a somewhat of an ascending channel. Maybe this wants to test a 21-day, but we'll see. Another stock that I feel came in a little bit more than it should have, which has been choppy, has been Facebook. Facebook has been good to us sometimes. Sometimes we like it. Sometimes it's our friend. Sometimes we want to block it. With that said, you look at Facebook, and this too had a little bit of a, this was more of a flag pattern, but a little bit of a descending, ascending channel where you have a range here, an upper range, and when it breaks, guys who are playing it for momentum probably sell out. I think I talked about it in the my note, I talked about maybe 67, 68 something, no, 67, something right around here. I said, if this is your stop, you have to honor it because you never know what's next. And it broke, it came a little bit off the lows. We'll see if it touches the 21-day like it did here and here, if we could buy it. This is how it looks with a little bit of more of a step back approach. Not the end of the world. This thing has definitely been whippy at times. Here's when it broke out. Look what happened here even. Breakout, failure, regrouped, and then went again. So you can't just say game over in Facebook, but if you had it long today, it definitely hurt as it broke this upper momentum level. So we'll see how it handles it tomorrow. Maybe there'll be an opportunity here. We'll see. Down open would be great, you know, because then maybe we buy it like we've been able to do a few times before. LinkedIn is still a lethargic mess, but hangs around, just not ready to go. You would have thought it could have acted better here, you know, where you would have had some follow through, but this tends to go when it wants to. So I know Sperlin's trying to stay involved. It's kind of hard to, because if you buy any kind of strength here too, it hurts you. But overall, if you're in it at the right price, which was like 170, you're probably still okay. For momentum, though, it's going to have to clear 174.75, and it's going to have to take heavy volume, which we haven't seen in a while, so we have to wait. This was your last really viable move right there. As far as WB, you look at it, had a nice move, but I know for me, I bought it one too many times, and it kind of hurt. This was the first time it tried to go. Remember that? It gave you a nice move, a nice day-and-a-half move, so I was a little on alert that that could happen again. And after this move, it came back in. This time you had a nice little trade. We did it yesterday, and then it did trade through this prior area and went as high as almost, what is that, 22.59, and then it came back in and it closed okay. So it's just a little choppy. This is the IPO high, and now I would say you want to see it hold this in order to be able to stay with it with a little bit more confidence. As far as gold and silver, tried to hang in there, but a topping tail, so I've been in silver, and I got out of it today just because I'm not really a fan of the metals recently, and tried being involved. And you know, besides this day, this, you know, not saying it looks fine, but push through, failed, and just don't want to be involved. And you look at the GLDs also, not the end of the world here, but it's just hard to ever get momentum here. Here you had a wider range bar, big breakout, held in there today, tried to break out. If you added to it, you probably bugged out like most bulls in gold have been doing, which has been bugging out, because as much as it was up, you know, this year, it's still in no man's land compared to, you know, where it came into. So it's still down here, just going sideways, coiling. We'll see what's next here. But that's really it. Definitely, you know, a very quiet day, not a great day. We've had a lot of good days recently, so don't hold it against the market. The last thing you want to do is, you know, give away some money when you probably could be on your way to the beach, the mountains, and wherever it is you're going for the holidays. So if you found yourself frustrated today, just take it easy. Tomorrow's a half day. Either be very patient and pick out a few things, or just don't do anything at all and, you know, call it a week and a good 2 quarters and change, and then come back next week, raring to go, as it'll be earnings season. There'll be a lot to do during earnings season. A lot of individual plays, a lot of action, hopefully more volume. And then we'll see what's next. It's been a heck of a move. Markets have had a heck of a move for the past few years, let alone the last 6 to 12 weeks. So if volatility happens fast, you have to be aware. But you know, just use the 8 and 21 day until that takes place. Stay long, look for opportunities. If whatever you're in breaks the 8 day, maybe reduce. It breaks the 21 day and closes below, get out. And then wait for it to reset again. You don't have to be sitting in these things. We're in the moving business, not in the parking business. You know, but again, as far as like your macro approach, just keep doing what you're doing, depending on your age. If you, like I've said many times, if you bought the day before the 1987 crash, the day before that horrendous day when planes flew over my head on 5th Avenue into the World Trade Center, or even the financial crisis, and kept going every single month, you would have a nice long-term little nest egg waiting for you. If you trade intermediate trends or for cash flow and P&L, which is what we do, and we try and call our sweet spot, we're in a little area that with the non-farm payrolls tomorrow at highs, with not many things looking so tight, stay with things, but you know, just be careful on add-on buys. And if you're trying to be short and cute, make sure you have a way out if it goes against you. Scott Redler, T3 Live, Wednesday before July 4th. Have a great day tomorrow. I'll be in Short Hills, and also have an awesome holiday. You deserve it. Take care of yourself.